Welcome back, everyone. This is our looking at the charts report. My name is Angelos Zitis. We make a start with the currency pairs we'll be seeing today. First, we have USDCAD. Second, we have EUR/TRY. Third, we have GBPUSD. And fourth, we have AUDJPY. Starting with USDCAD for our chart. Fundamental news. On the USD side, most traders expect the employment report for March to be released on Friday, the 3rd of April. That could be a main driver for the currency pair. During the past days, the Fed unexpectedly announced a new measure taken to help stabilize the US economy. Now, foreign central banks will be able to obtain US dollars overnight by using their US Treasury securities as collateral. On the CAD side, the currency seems to be in a rather weak position due to the oil market crisis and the developments taking part in that sector. Technical analysis. We start first with a possible move upwards for the currency pair. That could lead to an attempt to breach our R1 1.4250 line that was tested many times in the last 6 days of March but was not clearly breached. Higher, we could also see the R2 1.4370 level last seen on the 25th of March, and in the ultimate bullish run, the R3 1.4510 barrier is also a possible target that was last tested on the 23rd and 24th of March. In a selling momentum, we have first the S1 1.4055 level last tested on the 31st of March and the 1st of April, but was not clearly breached. The S2 1.3920 level was also briefly tested on the 27th of March, while even lower, we have the S3 1.3750 line, which is also a possibility for the currency and was tested on the 16th of March. The RSI indicator below our chart is currently running between the 70 and 30 level, not providing much information other than some uncertainty being displayed for the time being. Moving to EUR/TRY for our chart. Fundamental news. The currency pair is mostly driven by the weakening of the Turkish lira that has been going on throughout March. Other negativity following the Turkish lira was seen in the past days when the country's manufacturing PMI pointed to a contraction of the sector. Turkey has also seen a substantial increase on its coronavirus cases, which have surpassed 13,000 in the past days. Traders should bear in mind that the inflation data from Turkey will be released tomorrow on the 3rd of April, and that could move the pair upon release. Technical analysis. Today, the currency pair has constantly tested the R1 7.35 resistance level, but until the present moment has not breached it. However, if the bulls are strong enough, then the currency could be heading towards the R2 7.60 level or even higher for the R3 7.80 line. All our resistance levels have been last seen in 2018. Now, in a selling momentum, the possible levels downwards are initially the S1 7.18 level that was last seen on the 31st of March. Lower, we have the S2 6.95 level tested on the 26th of March, and even lower, we have the S3 6.60 line, which is also imminent. Please note the RSI indicator below our chart is currently running below the 70 level, removing somewhat the picture of an overbought market. Moving to cable, GBPUSD 4-hour chart. Fundamental news. Many UK companies could be to suspend operations and temporarily send home approximately 50% of their employees, according to a survey by the British Chambers of Commerce released in the previous days. This is a measure to control the coronavirus outbreak. However, the government and central bank will be pouring in billions of pounds to smoothen the situation for these businesses. Traders should be aware of the Market Services PMI final reading to be released on the 3rd of April, Friday, and also the US employment data on the same day that could move the currency pair. Technical analysis. Please note the currency is moving in a sideways motion between the R1 1.2450 resistance level and the S1 1.2270 support level. Both levels have been tested in the past days, but the currency is trading in a somewhat straight line. On the upside and above the R1, we have a possible stop at the R2 1.2630, and higher we have the R3 1.2750 level. In the opposite direction, below the S1, we have the S2 1.2130 line and the S3 1.2018, which could also become targets. Please note the volume indicator below our chart indicates lower activity since the 31st of March for the pair. Moving to AUDJPY, 4-hour chart, fundamental news. Uncertainty runs high for the commodity currency as forecasts for a prolonged economic slowdown could have a wider adverse effect on the Australian economy and currently may be reducing the risk appetite of the market as well as the Aussie's attractiveness. Even though the JPY has been generally stronger against the AUD, and this has been going on since January, it had continued to do so since the 25th of March, while worries on COVID-19 infections in Tokyo are holding down sentiment at the moment. Technical analysis. The S1 6492 level was tested various times since yesterday, though the pair seems to be holding up. However, if the level is breached to the downside, the next possible stops are the S2 63.40 and the S3 62.45 that were both seen in March. If the pair comes under buying interest, the R1 66.20 level could be tested first. Higher, we have the R2 67.45, and even higher, we have the R3 68.85, which are also possible stop points. However, very simply, the pair seems to be driven by the weakness of the AUD and the strengthening of the JPY due to safe haven flow demand. Now, as a closure, we would like to note that looking at the charts report is designed for traders to balance between fundamental news and technical levels. However, the decision of what works and what doesn't work is yours to make. Thank you very much for your time. Enjoy solid trading.